Good morning, good afternoon, greetings. Um, this is the first time I'm trying a live stream. I am really hoping that the microphone's sensitivity isn't too much. I hope it's not too loud or too low. I'd prefer to get a feedback, but if I don't get any, I will begin. In about 5 minutes. Alright, I'm just going to begin and hope that everything is clear. Hope my internet connection is stable and microphone isn't too loud. So firstly, as always, as tradition, we start with the dollar index. On the dollar index, I'm paying attention to a very specific level, which is the weekly buy side imbalance. This weekly fair value gap in the form of a buy side imbalance or side inefficiency residing at this level from the 105.517 area here, this BC that I highlighted. And my prediction, my outlook for the week, and what I've been wanting to see moving forward was for us to tap into this BC before rallying up. But to be honest with you, I didn't like what Euro did this morning. So let's quickly jump over to Euro and Pound on the 1 hour charts. This morning I had this trade idea outlined because this would have been a textbook entry for me personally. Looking at Euro, we have a sweep in the liquidity at this when we opened during London session. We swept the liquidity, we displaced lower, we left a fair value gap, a tiny one, but there is a fair value gap there with an order block. So at this point we can see there's a fair value gap. It's a very small one, but it's there. So this entry would have been a textbook entry for me to go short, of course with the stop loss being at the high there, right? And at the same time, the pound was not able to make a new high, so this had a failure swing. So now this to me becomes an SMT divergence where EU made a new high while GU couldn't make that high, signaling to us that we are bearish, right? And especially the pound being weaker than the euro, so I would possibly consider taking GU over EU. Of course, I would have taken both, to be honest, if there wasn't CPI coming up. But since there is CPI now, I'm not really going to bother myself with this trade idea. But this was what I saw. This is what I wanted. And right now, Euro is, to me, Euro is ripe enough to sell off because on the daily chart we also have a sell side imbalance, a tiny one residing at that point there, and I did not like the fact that we closed above it yesterday. I was watching price until this daily candle closed right last night, and I saw that we closed above it. I didn't like this signal at all, but I'm still ultimately bearish on euro and on, of course, on pound. And on the weekly chart, we are technically in a sell side imbalance that we haven't closed above. So even though we've closed above the daily one, we haven't closed above the weekly one. So I'm still looking for bearish price move on euro. Of course, this is the invalidation point that I drew out at the beginning of the week using this fair value gap from a weekly perspective, remembering that this is the first ever fair value gap, the first ever CB that we've gotten in the last 10 weeks or so. This is the last time we got a fair value gap in a CB. We didn't get one since that time until this point. So I don't think this was a mistake. I don't think this was not intentional. I believe this was perfectly intentional. And I believe that if you're a swing trader, if you're a high time frame trader, or if you're a trader that just doesn't like to see too much volatility, too much stress, you would have taken this trade with your stop loss being above the candle that started the fair value gap, right? So that would have been your stop loss and targeting the inefficiency that I highlighted in my previous videos, which is the monthly BC. So yeah, so because the dollar hasn't tagged into the weekly fair value gap, the weekly buy side imbalance, I still believe that we may see a possible sweep in liquidity, one more sweep in liquidity before finally displacing lower. The thing is, when we do displace lower, this is going to bring a wonderful trade idea for us, because if you notice, this to me is a low resistant liquidity run. We've basically been trading, and trend line traders are probably gonna have something like this on their chart, while of course we know that on our part we try to fade exactly this. We don't want this. So when we do displace, take out a swing low and close below that swing low, it makes our re-entries easier to work with. So we can have something like so, sweeping the swing lows, for example. Any retracement we get, we know is just an opportunity to sell the market even more, until of course this market maker sell model is complete. So that's the one advantage we have, right? And something similar to this is also visible on the Nasdaq. Actually, on the Nasdaq, it's a little more clearer. We can see and notice that at this point from Friday of last week, we've basically consolidated. We went down, then up, then down to where we were again, then up. We basically made equal lows, equal highs, right? So this to me is a chop, and I would consider this the initial consolidation of the market maker sell model. Of course, we're just completing this buy model first to take out the initial consolidation residing at that point, right? So after taking out this buy side, I would like to see us start sweeping all the sell side liquidity that we've been creating, moving higher and higher. So we've got that, we've got that, we've got that, and of course the last one. So this is what I would like to see us going into CPI, sweeping liquidity of these relative equal highs, and then displace. I would really like to see that displacement to show us the willingness to go lower. I don't need to chase price or anything. It gives me the confidence to re-enter any pullback that we get, whether you want to use an OTE entry or a fair value gap, an order block, whatever it is. It makes you a lot more confident to see price going lower. But this is what I would like to see completing the week. So let's take out these drawings to make things a little bit cleaner for now. That's what I'm looking for on the Nasdaq. Of course, on ES, I specifically pointed out this weekly levels for you guys. I said I was looking at this weekly CB and this order block, and looking at price right now, look how we are perfectly still inside of this order block's tail. So I do believe that that E-mini S&P could go higher, but not that much higher. And remember in the daily chart when I said that I preferred this higher fair value gap to be left open, I still stand by that. So we might go higher, I don't mind that, but I still stand solid that I don't want to see us tap into this fair value gap. Of course it's possible, but I wouldn't like to see that, to show me that we are truly bearish, that price is really heavy, that it couldn't even go to this inefficiency. The next thing that I need to point out, of course, is the the monthly cycle. We can see in the first week, which is the first quarter, we basically went down to go back up. You can call that X, you can call that accumulation as a chop, which actually is a lot more appropriate now that I'm thinking about it. So let's fix that real quick. So it becomes AMDX, because we just noted now on the Nasdaq that we consolidated from Friday, right? So this is the chop, this to me is the Judas. We have the true month opening at the second week, the second Monday of the month. So we got the true month opening over there, and now we're pushing higher into a high time frame PDRA, which was obviously a monthly order block and a weekly order block and a weekly fair value gap in the form of a sell side imbalance. So I'm looking to see if we can displace lower, give us the willingness to push lower, and then we can enter any reversal to take it down. And I would expect more push lower to take out this sell side and this sell side liquidity going into next week. And that's what I'm looking for basically across the board. I think the only thing I haven't covered was the SMT divergence between ES and Q. So let's cover that quickly. So we have, let's put the continuous contract. We can see on the Nasdaq, if and when we do sweep this buy side liquidity that we just highlighted on the 4-hour chart, right? If we sweep this high, it's going to be some sort of SMT divergence, right? So this is a random area that I'm putting right now. I'll see the real area when we do this place higher, but I'd like to see us sweep liquidity to create a new high, and that high is going to be a failure swing when you check it on E-mini S&P 500, because the high that we highlighting here is from the 18th of September. Looking down there to see the date, it's the 18th of September. If you check here, the 18th of September is this candle right here. So you can see how far up we are as compared to Nasdaq, which is why I'm really bearish on the S&P 500, and why I would prefer to sell the S&P 500. So that's what I'm watching for today. I've already set an alert on the Nasdaq, and I'm going to be looking at ES. So let's split our screen into 3. So I'll be looking at the E-mini S&P on a daily chart. Well, let's change it to the 1-hour chart. We'll be looking at that, and then here we'll be focusing or paying attention to let's see if we can actually split this into 4 instead. So here we have the 1-hour chart for E-mini S&P 500, and then here we will have the, let's put the dollar index here so we can see if we could tap into that weekly buy side imbalance that we have been staring at the whole time. Then of course here we can go to our standard 1 hour chart on the pound, and then here 1 hour chart on the euro. No, I want the one from forex.com. So this is what I have, this is what I'm looking at. Yeah, of course, if there are any questions, I'm open to anything. We have CPI numbers coming out in in 30 minutes, so I'll be waiting. If anybody has anything, I'm here to attend to them. thought I should quickly cover silver, as requested, of course. It's not, might not be something I pay attention to today, but I will look for it. I will look at it longer term. So, silver and gold. On silver, I actually already have an analysis on this. Let me see if I can pull it up. On silver, I'm looking at this level that we actually trading into, coincidentally close. I highlighted this on my video from the beginning of the week, and I still stand by it even now. I'm looking at this sell side liquidity, this one and this one, and my entry would have been in this other block, and I did mention that my invalidation point would be here. Well, technically should be here, but I'm just gonna put it here. And speaking of this, I might set that now as a pending order. The problem with MetaTrader is that we can't really see, we can't really work with a 9-hour chart, so you have to sort of figure it out. Yeah, sort of have to figure it out, or perform a manual execution. So let's see if we can get that. Silver. I'm trying to see if I can get the substitute on the daily chart. The next best thing. So this level on a daily chart is essentially this fair value gap that we are in right now. It looks like it could be the consequent encroachment of it, meaning it's literally just the perfect half of this daily fair value gap. So basically this candlestick's low on the daily chart would be where I could consider taking a sell-off from gold, from silver. And I'll cover gold just now, but wanted to quickly put that out there. 22.296. And the validation point is from a 9-day chart, 23.6. The only difference between silver and gold to me is that silver seems a little more controlled, but let's do something. Okay, done with that. So looking at this structure and comparing it to gold, of course on gold we also have the sell side liquidity that I've highlighted, this swing low from the 9-day chart, and of course it's also visible on the weekly chart. But with gold, I assumed or felt and thought that we were possibly going to use this inversion fair value gap, but I did mention in the video If those of you that remember, I did mention that there was a likelihood that we could also tap into this, which is why I have an alert set there, and we haven't tagged into that level yet, because that level is roundabout where it's about where the 50% is of the weekly sell side imbalance. Of course, why that level specifically? It's just a bearish order block, nothing too fancy about it. And on a lower time frame, this would have been a unicorn setup, because it's a bearish order block that together with a sell side imbalance, nothing really unique about this one, but it's just a weekly order block. But I won't be touching gold today. I could watch it, I could trade it maybe tomorrow, but I most likely won't. With silver, I'm looking to see how we could react from this level, and we have all this sell side liquidity so perfectly smooth. So I would like to see if we could wipe this out this week. And while we're here, let's take a look at oil. With oil, this here is a multi-time frame order block. Actually, looking at US oil, we can see it's an order block there, but looking at CL, the futures contract, we can see it's a perfect order block. We can see it's a 9-day order block that we rejected from Friday, and then to yesterday we finally filled in the new week opening gap, this massive gap that was created over the weekend. We filled it in completely, and that was Tuesday and Thursday's price action. So a bit of today, we closed it completely before seeing a push up. So I don't think oil is going to show further downside. We may see price come back to this inversion fair value gap. I'm paying attention to this CB residing here because we have closed above it now. So this makes it an inversion if we ever come back to it. So if we ever see lower prices on oil during CPI, I expect it to bounce off from here. That's what I'm seeing on oil. Don't know if there's anything else. I'm just answering a question from the comment from Rose, so don't know if there's anybody else that might have any further questions before the chaos ensues in 15 minutes. So let's go back to our All right, so we left with about 2 minutes until FOMC does its thing, and I do have to mention, for those that are planning to actually take the trade with with CPI, I'm saying FOMC. Those that are planning to take the trade, you should remember that your stop loss may not even be respected. So you may think that you're risking $200 on that trade, but I think you'll find that it'll past skip past the stop loss, and you find yourself blowing your account. So please be careful out there for those that are planning to take the trade. So let's see what they have for us. Few seconds left. This is the weekly buy side imbalance that I was pointing out. The weekly buy side imbalance I was pointing out earlier. I just changed it to the hourly chart instead. Okay, so gold just tapped into the weekly order block as well. I just got the alert for it now. Okay, price is melting off. Euro is falling. Let's see if any liquidity will be swept on any of them. I think they just want to take some liquidity, then come back to the inefficiency before going back up on the dollar index. But let's see. Usually the first move is the correct move for me. Okay, so far it's more one directional, which was what I was afraid of because I was looking at this fair value gap on a 1 hour chart on euro and on pound over there. But I am not liking the fact that we did not retrace into this weekly BC2 blast off from. But if we do continue trading lower and the hourly candles close below a swing low, then that gives us a form of assurance that we may see continual lower prices, because the market maker sell model would have peaked. Normally CPI can be more violent than this. It normally takes out buy side and sell side and buy side again, but this time it's been a little controlled. But I'm still watching it closely. Everything is literally just going our way, with an issue being that we didn't necessarily get tagged in some of the moves. But even if it doesn't, that's also okay, because we will be able to get something clean from here. It may not necessarily be a fake move per se. This one has been solid. It hasn't been wiki, it has not been doing random stuff that's unpredictable in a way. It's been very controlled. Okay, so looks like the euro is weaker. Well, actually pound is weaker than the euro, so I'm going to switch to pound and S&P 500. I'll alternate actually, one at a time. So on Nasdaq, on the hourly chart, we have taken out this swing low. We haven't closed below it yet. This hourly candle is closing in the next 20 minutes. And again, as I already mentioned, this is a very good sign. Okay, YM has not taken out any swing low. Nasdaq has taken out that tiny swing low there, but I would like to see this one for me to confirm anything. So let's set an alert on this and pay very close attention to it. The reason I'm pointing out, the reason I'm saying that even though we did not sweep any liquidity before falling off, it's still okay with me, is because, as I already mentioned, this is a possible market maker sell model being formed, and there's a chance that we could get a cleaner setup going into Friday and next week, where we do something like so, going into next week targeting these relative equal lows. So even if we don't sweep the high in the next 1 hour, in the next hour and a half actually, it's still fine. We will be able to get a clean setup going into the coming days, hours and weeks. So let's keep an eye. Let's see what GBP USD has for us and Euro USD. So Euro USD has swept these lows residing here. We haven't closed below it yet. As I said, this candle is closing in the next 20 minutes. GBP USD the same, and let's clean this up a little bit actually. This was the analysis I was doing earlier. For my group, Another thing that we need to keep in mind for those that don't necessarily want to wait for the hourly close, for example, and wait for a retracement to continue taking the trend going to the downside, is you could also wait for the daily candle to close. So, for example, let's go back to pound. We have the daily candle, and look at how we stayed within this sell side imbalance, right? So if and when the candle closes, the daily candle closes below this one, for example, um, this fair value gap here. So let's say by the end of the day, this candlestick closes below here. That gives you a clear indication that we could just retrace back and use this as resistance for lower prices. So I'm keeping an eye out on this as well for the end of day video that I'm going to make. So for now, we're still paying attention to the 1 hour and 90-minute charts. Oh, and I know that people that pay attention to gold. So let's see how gold and silver are doing. We got an alert just now. And look at that. Look how beautiful that setup was. Exactly to the tick. Exactly when the alert went off on gold on the weekly order block. We tagged it with almost no drawdown. Going back to the 1 hour chart. Look how beautiful that was. We tagged it. 2:30, 8:30. We just started displacing lower. So gold was just beautiful as well. Silver did not give me the entry that I wanted, but of course the same direction. So let's continue watching and see how the next 20 minutes closes. Gold was just beautiful before the news. It tagged it, then decided to fall off from there. I just did not like the fact that the dollar index did not tag into this weekly buy side imbalance, but it also indicates that we have very, very bullish prices coming up. So strong that it was not even able to tag into this BC and decides to continue to the upside. I'll do a proper review by the end of the day. So for now, we're just going to keep paying attention. Let's go back to the 1 hour chart. E-mini S&P 500 has taken out a swing low, as I've already highlighted. I would have really liked to see this swing low by the end of today. So let's also set an alert on that. Nasdaq, it's meandering. It's now been about 30 minutes. After CPI. So let's check what the 15 minutes chart has for us. Still nothing. 5 minutes chart has this sell side imbalance, but I would rather wait for the equity market to open at 9:30 before taking any move any entries or anything. The Dow, on the other hand, at least has an inversion fair value gap sitting here, but we haven't closed yet. We haven't closed below it yet, so well, it's closing in the next 25 seconds, so I guess we can call it an inversion as long as we close below. Okay, we have closed below and we are tagging into it, but still nothing solid yet to work with. Of course, anywhere from inside this area could be considered an entry to the downside, but I would rather wait for this 15 minutes candle to close, and we might get another fair value gap, another CB inside of this area for lower prices. But we'll see how this plays out. For me at this point, whatever happens, even if we do sweep buy side yet again, I would still like to see continuation to the downside going into the rest of the week. The hourly candle, of course, has not closed yet. For me to see a valid market structure shift, I'm going to be using this swing low, which was basically yesterday's low. I'm looking to see if we can get a market structure shift here. Just ignore the telegram for now. Just ignore the telegram. Ignore the telegram. This is what happens. Everything is just, yeah. Ignore the telegram. I muted it intentionally before, but yeah, things are happening. Lord. Let's just wait to see how the hourly candle closes. I'm not gonna do anything for now until equity market opens. So now that things are dying down a bit, now that some people are trying to catch the bottom and ride it up, others are jumping in to sell it. Of course, the hourly candle hasn't closed yet, and so far it's not closing how I want it to, but I'll be looking to see how the opening bell, the equity open at 9:30 opens. So the first thing I noted was when the time we closed at 4 p.m. last night, I put it as the open range gap. I was not sure if it's going to be the open range gap high or low. Depends on where we are, where we were trading before 9:30. So if we're trading at this level and this becomes the open range gap low, I wouldn't be surprised to see us trade higher into it and then continue to the downside. So that's what I would ideally like to see. And of course, the second thing I'm looking at is this inversion fair value gap on a 15 minutes. Why am I looking specifically at that one? It's because when you look here, paying attention to this specific candle, it's 6:15, right? We can see at 6:15 to 8 o'clock we had a higher high, right? Essentially there was a turtle soup, a sweep in liquidity. But then when we look at the Nasdaq, we had a there's a 6:15 there, we had a very shallow higher high. We barely picked up, and that this makes me feel that we may be done making a high of week and high of day. But of course, I'm still paying attention to it to see how we trade from here. I've already mentioned that I would have wait, I just realized I just pointed out the same thing. Oh, the Nasdaq didn't even make a shallow high. I thought it made a shallow higher high, but it actually made a lower high. So let me just put it side by side. So put in the Nasdaq there and put in, well, let's just put the continuous contract for both of them. We see here on the 15 minutes chart that we have a turtle soup, a sweep in liquidity. Again, 6:15 candle, 8 o'clock candle. So let's identify where those candles are. There's the 6:15 and there's the 8 o'clock. So this to me becomes a failure swing. So basically a lower high on the Nasdaq. We can also compare that to YM, same turtle soup scenario before displacing lower. Oh, and there's the inversion fair value gap that I highlighted from the 15 minutes. We traded up into it, and now we just created another fair value gap up there. But I don't want to see us trade back into this area. If we are really going to be bearish, if we're going to be extremely bearish today, I don't think we'll see higher prices. But again, nothing is set to stone. For me personally, that is the case until 10 a.m. New York local time, because by then CPI would have happened, equity open would have happened, the increase in volume and everything would have happened, and I would then best be able to judge what my next play would be and probably what trade I'll take. So for now, we sit on our hands and not do anything. Let's go back to the currencies. I know I started off wanting to only trade the E-mini S&P 500, but the currencies are also they got my interest. So on GBP USD, we did in fact close below the swing low. I'm not sure if we did the same on Euro. Yeah, we actually did close below this swing low, not this one, but Euro, as we know, is the stronger. So this swing low is a valid enough market structure shift for me. So we can then now officially call this a market structure shift. And for me, since we're looking at the 1 hour chart, any retracement into a 1 hour fair value gap, I would consider selling from there. Of course, 1 hour or 90 minutes, as we know, those are my favorite time frames, especially now that I'm paying attention to E-mini S&P 500. I prefer sticking to the 1 hour chart. I know I could focus on this 15 minutes one. I know I could dial it down as low as I want. I could take the inversion of the 30 minutes one, but I would rather wait for the 1 hour structure on the currencies. So 1 hour or 90 minutes chart. I don't care If price decides to continue running lower, we have so much liquidity to purge, as we've already highlighted. So we'll see. And we also have tomorrow's price action. And what matters the most out of everything is the daily candle. As I already mentioned, I would like to see if we can close below this BC on a daily. I would prefer that to show us a very strong bearish signature. So this is what I'm looking for. This is what I consider more important than trying to rush into a trade right now. And also we should keep in mind that we didn't tap into that weekly BC, the buy side imbalance, from a weekly chart on the dollar index, which I already said that it might just be indicative of very bullish price, that we had to leave this open and only purged the lows, because remember we had equal lows at this point. We purged it, turtle soup, so we might just not have to tap into this area and take this as a sweeping liquidity for continuation. Of course, all these things are possibilities, so we will just see. Let's go back to the mini S&P 500. We still have 26 minutes for the equity market to open, and another 30 minutes on top of that for me to be sure of what is going on. But right now, as I've already stated, I'm extremely bearish. On everything. Of course, bullish on the oil, bearish on gold, bearish on silver, bearish on the indices. And yeah, UCAD, I was looking at a 4-hour chart, but it's been choppy lately, so I decided not to touch it. With USD CAD, I was looking at these areas to possibly see us pushing higher. So I would have liked to see this, but the dollar did not give us the fall off that we wanted, that we needed for that to happen. So let's get rid of this for now. Go back to even the German index is also falling off. So let's keep watching for another 20 minutes. All right, so it's a few seconds till equity market opens, and as I highlighted without the sound, I was looking at this 1 minute inversion fair value gap to take YM lower, but let me just erase this. I'm not paying attention to the 1 minute chart today. So going back to what we are here for, which is E-mini S&P 500, we now have the open range gap because we opened here, so this becomes the open range gap low. So when price goes back into this level, which is this inversion there, that little fair value gap there, I might consider taking it back down. Because I believe when we change to regular trading hours, we have that exactly. So with the Nasdaq, we closed there and we opened there. So when we change it back to the regular electronic trading hours, we can see this one is a little better because it's inside of a CB. I'm not going to do the same for YM today because I'm not really paying that much attention to it right now. Nasdaq is really showing is showing a bit of strength, but that might just be because of the open range gap here. So I'm looking to see if NQ Nasdaq could trade up into the inefficiency here on the 15 minutes chart, which I believe is also on the 5 minutes chart. On the 5 minutes, it had already traded into it after CPI came out, but I would like to see if we can trade up into it. If we don't trade up into it, if we break lower and disrespect all these bullish PDRAs, then we may see very heavy price. Of course, I still have YM that I'm paying attention to here. And going back to the 15 minutes chart, we can see that inversion fair value gap is still holding. Remember the time I drew it out, I was waiting for this candlestick to close below it, and we closed below it. So the time we traded back into it, that was the indication to probably sell it off from there. I'm still waiting to see if Nasdaq can tap into this open range gap top or high. S&P 500 is not even trying to, well, it's not right now. And the currencies are still pouring. As I said, with the currencies, I'm not going to pay too much attention to it right now. We still have 20 minutes for this candle to close for us to get that 1 hour CB that I mentioned. The 1 hour CB, it has not been created yet until 20 minutes has passed. That will be my first entry. Of course, if we don't get that, I already mentioned that I would like to see a closure below this inefficiency. So I'd like to see by the end of the day to close below this. Let's actually just draw it out and keep it here in mind. Close below. So this is the level here. It's 1.22442. Obviously, I'm paying attention to the pound because it's the weaker of the two, as we've already mentioned earlier. But the same applies with the euro, of course. So let's go back to we just got an alert on Nasdaq tagging the open range gap high perfectly. So let's see if we can get a displacement from this now. So this is a 15 minutes fair value gap in the form of a sell side imbalance. Let's label that 15 minutes. And I would like this to be a little more. All right. So I'd like to see if we can displace from here. Let's get rid of the alarm because it's going to just keep ringing. Of course, the first target would be this sell side liquidity. We can set an alert on that. It's about 50 handles. Of course, I've already given reasons earlier why I don't want to see higher prices. We failed to make a new high here as compared to E-mini S&P 500 made a new high as a turtle soup and then displaced lower. So I'm looking to see if we can tag this low, yesterday's low, previous day low, by the end of the day. Of course, we've already swept London sessions low, but we also have swept London sessions high. Let's bring that up quickly. You can see London session high was the one that was turtle swooped. So I expect nothing but lower prices now. Well, I don't want to see us trade above this level. We still haven't traded into the open range gap high on E-mini S&P 500, but we have on the Nasdaq. And on YM, I don't think we'll even come there at all, but we were technically inside of it, because this is the inefficiency that was created when we closed last night. And we can see when we opened today, we were already above it, so there was no reason for it to trade higher. Let's go back to S&P. We might get a relatively clean silver bullet entry, which is at 4, well, which is in 20 minutes, which is 10 a.m. New York local time. So let's see. The Nasdaq is showing strong signs from rejecting from the 50-minute sell side imbalance. I'm mainly focusing on the possibility of a silver bullet entry right now. Of course, as expected, everything else is melting off, from the pound to euro and the indices, of course. So let's bring back Nasdaq. Nasdaq actually is the weaker today, and I guess technically the weaker overall, while E-mini S&P is delivering beautifully. So nothing really surprising there. Nothing really surprising there, but just something to note. Nasdaq is about to deliver the 50 handles that we were looking for. If I was in this trade when Nasdaq sweeps this sell side liquidity at 15,361.5 with momentum, with aggression, I would probably adjust my stop loss from that swing high to the body of this fair value gap right here. I know it doesn't make much of a difference, but that's because I'm looking to see if we can target this swing low, and only when the swing low is tagged that I would move my stops to break even. The reason behind this is because of the volatility Nasdaq has compared to the compared to S&P 500, and the possibility of E-mini S&P trading higher back into its own open range gap before falling off. I'm paying attention to that possibility. So of course, if it can trade higher, then Nasdaq might trade a little bit higher, and you don't want to get stopped out unnecessarily. But this has delivered well over what the silver bullet should deliver, which we know is 20 handles. And from this point to this point, it was already at 40 handles. So this would have been all you needed for the day, more than what you needed for the day. I just want to see how much it's willing to push lower. Nasdaq is still meandering in this area, and we have 13 minutes until the silver bullet hour, the first New York session silver bullet, which is between 10 and 11 a.m. New York local time, of course. YM is continually giving retracements. This could be the 15 minutes entry for silver bullet, but we'll see in about 50 minutes time. I would also like to see how we sweep that swing low. S&P 500 continually pushes lower without filling in the gap, without even trading higher into it. Of course, as the weaker sister, this is acceptable, which was also why I preferred trading the S&P 500 when I'm bearish, and then when I'm bullish, I'd rather take the Nasdaq. Well, at least for now, for the quarter of the year. Let's switch to the 90 minutes chart and 1 hour chart. So again, as I mentioned earlier, we have all these bullish PDRAs, which is why I don't have any alert until this point. When we trade below this low and close below this low, that gives us a very strong indication for bearishness and a possibility of sweeping all this rally to the upside. So let's keep watching. And then the 90 minutes chart, we've got the same thing, an order block there that I would like to see disrespected by trading lower. The Nasdaq is still struggling to make lower prices to push lower. I should also mention that even though the Nasdaq is technically the stronger of the two sisters, I still believe that it's the sixth sister, meaning that later on it would want to catch up as quick as possible with the other two averages. So let's keep watching. I would prefer to see this swept before before 10 o'clock actually, and a possibility of seeing this being used as an inversion fair value gap for silver bullet to take it to this low. Let's switch to the 5 minutes chart. On the 5 minutes chart, if this was all we had to work with, I would already tell myself that we swept this internal buy side liquidity by spiking up into this higher time frame PD array, which we know was a 15 minutes CB, right? So it's a higher time frame PD array, and now we're displacing lower, creating a market structure shift at this point, and we have this sell side liquidity to target. I know it's not the best structure, but based on relative strength, I would say that I would like to see the Nasdaq take this low being the critical low, being most important low that I'm focusing on right now. But let's go back to the 15 minutes. The reason I'm on a 15 minutes chart, because normally I'm on the 5 minutes, 1 minute or 30 seconds chart, but the reason I'm on a 15 minutes today, even though it's a very slow time frame, it's only because it's a big range day today. We displaced with so much momentum that if you're on a smaller time frame, there'll be a lot of liquidity voids and volume imbalances, and I'm trying to pay attention to multiple instruments at the same time, so my attention would be split and I might lose focus on something. So I'd rather just stick to higher time frame where I can work with the pace. It's a lot slower, but I can work with it. So let's wait for another 8 minutes. So the sell side liquidity purged on a 15 minutes from YM. I don't know if my mic was active earlier, but I'd like to see if we can sweep this external, well, in this time frame it's external sell side liquidity by 11 a.m., which is the end of the silver bullet hour. So in about an hour's time, I'm looking to see if we can sweep this low. Nasdaq is still consolidating, and I would like to see I don't want to see further upside manipulation. I'd rather like to see a displacement, a sharp displacement during the silver bullet hour, and a possible retracement into the range before a continuation to the downside. So that's what I would like to see on the Nasdaq, and I'm probably not going to chase after the silver bullet of this, and rather focus on the 1 minute chart on ES if we haven't swept this sell side liquidity by then. If we have, then of course I'll be targeting this sell side liquidity. So let's pull it out in time. So we got that. On a side note, um, we've got GBP USD still trading lower, and if you guys remember, I said I wanted us to close below this line at the end of the day, so I'm still paying attention to this. Of course, the daily candle still has about 7 hours to close, so a lot can happen between now and then. But I'd like to see us close below it because of this possibility of being used as an inversion fair value gap for the next coming days, and to prove to me that we are not respecting bullish PDRAs anymore and we're just going to continue to the downside. Of course, remembering this CB. The same goes for Euro. Euro, of course, we have this bullish order block. I don't mind us trading here. I just want us to close below the 50% of this candlestick, which is my only requirement from Euro. And again, Euro has already met its high time frame objectives, so I'm paying more attention to GBP USD for the coming days and weeks. So we'll still keep an eye out to see how this pans out. So let's go back to NQ, back to the 15 minutes chart. We are still consolidating, still chopping around in this range. YM is still pressing lower, and it's the silver bullet hour now, so I'm looking to see if this low can be targeted by 11 o'clock. NQ still being the stubborn one of the three. It's the only one that actually went deeper into the open range gap. But let's keep an eye out and see how it plays out. So we see that during the silver bullet hour, we have the Nasdaq completely filling the sell side imbalance, the fair value gap that we highlighted on the 15 minutes. Of course, being the stronger of the two, this completely makes sense, which was why I said earlier that I would have liked to see us close below this swing low, and preferably this fair value gap, so it could be used as an inversion for the silver bullet hour. So now that we are displacing higher, I wouldn't feel too comfortable taking the trade. But if I was to take the trade on a 5 minutes chart, all it's going to look like to me is this was a chop. Of course, I said earlier that I wanted this to be the turtle soup of sweeping this high, but this could also be the turtle soup. This could be the main Judas swing, if you would. And while we're here on the 5 minutes chart, I ideally would not like to see us trade past this level too much. Especially, well, I don't want to see the swing high taken for sure. I don't want to see this high taken. And if we're going to tap this level, let it be an immediate rejection, because I'll be able to qualify this as a bearish order block on a 5 minutes chart. And if I was trading the silver bullet, this would probably be where I take my sells. Let's see if we can pull up the demo account. Not really sure how this works, so let's see if we can take a sell there. This would have been the setup I take. Stop loss being at the swing high, take profit being at this low. So now, of course, this is not financial advice in any way. I've already mentioned all this in the description, but this is what I would have liked to see. Of course, as you all saw, that was a demo. This is a demo account and nothing to be taken seriously. So I'm just sharing what I would have taken if I was the one trading. And this could very easily hit the stop loss right now, very easily, which is also why I'm saying that nobody should take the trade, and it's just what I would have taken. I also did start off by saying that the Nasdaq is the stronger, it's the stronger sister, while ES and YM are showing weakness across the board. So as see, we have traded above it, so really not a good sign. It's about to get stopped out and stopped out. So that's exactly why I wouldn't take the trade, especially not on Nasdaq, even though people do see bullish prices. But something interesting is happening now though on the Nasdaq. Going back to the 4-hour chart, remembering that we have this consolidation, and also remembering the 1-hour fair value gap that was sitting above this buy side liquidity. Let's pull it out in time. We have this. We have this 1-hour fair value gap. And we have that buy side liquidity. So So let's watch and see what they have planned out. So on the Nasdaq, they are determined to sweep this buy side liquidity that I thought they were going to sweep during CPI, but they did not do so. So let's see if we can get a shift in structure somewhere within this area, and we're probably going to get a complete lunchtime reversal. So yeah, that's all I have there going on the Nasdaq. On YM, we still have extreme bearishness, and we are about to tag the sell side liquidity actually on YM. I'm still watching the E-mini S&P 500, and I'm taking this retracement into the range as a possible opportunity to take more entries. Of course, I did say that I'm paying attention to the 15 minutes chart because of the wider range. So this would have been someone's 15 minutes silver bullet entry. And Nasdaq is now aggressively retracing, which I don't like. I don't mind, but I don't like. I don't mind because it shows us that it just wanted to sweep these liquidities. Apparently these highs were too smooth for Nasdaq, but I would have preferred they swept this buy side liquidity as well, but maybe there was no need for that. So let's see. It's also a good sign that we are falling off with this much momentum along with S&P 500. So if this truly is the high of the day on the Nasdaq and they just wanted to push these liquidities, this smooth buy side residing here, then I would like to see. The only time I would reconsider is when we sweep this swing low, this swing low here, because that is the only point I'll consider this a market structure shift on a 15 minutes chart. Of course, in the 5 minutes, you're probably going to find other PDRAs, like using this 15 minute CB as an inversion fair value gap to trade below it and then use it to respect lower prices. But let's see in the next 12 minutes if if this candle can close below, well, technically this whole silver bullet hour until 11 o'clock, which is when I'm ending the stream, let's see if this whole silver bullet hour can bring a candle below that closes below the CB, so we can see if it will use the CB as a ceiling to plummet. YM is stalling also because of the other two averages, but of course we also have this inefficiency. We don't need to see this one get tagged into, because that can just be used as a breakaway gap. Let's measure the range. It's a fair value gap at the 50% mark of the range, and exactly as I said, I would like to see it remain open, because that would show that we have real bearishness. And if I wanted to take this trade on a 5-minute chart, I would have taken the sell from this CB, but my stop loss would have been here at the third candle that formed the fair value gap, and of course I take profit here at the swing low that we just highlighted. So this would have been my silver bullet setup. Of course, whether it's negative risk reward or positive doesn't really matter much to me, because the drawing liquidity remains. Let's take a sneak peek at the currencies. This is the line, the low that I wanted it to close, but of course with the currencies there's no rush, because we still have a couple hours for for the daily candle to close. Still have 6 hours 40 minutes, so I'm not really paying too much attention or worried too much about this. We'll see how to trade the currencies by tomorrow London session. Same with the euro, but nothing too. You can also see from the daily chart that the Nasdaq, I believe, is the only one with a bullish candle, the only one with a green candlestick, because S&P definitely doesn't have that bearishness, and YM definitely doesn't have that. It's just complete red. So more reasons on why you should be able to pick the correct pair to be trading and risking your money on. So I'd like to see us trade below this and be used as a ceiling, as resistance to push lower. But obviously, as I already said, I would have preferred us tagging this buy side liquidity. I don't like the fact that we stopped here. I'd have preferred tagging into this lighter purple area before falling off. But we will see how it plays out. There's not much reasons to pay attention to the Dow, but I'll set an alert on our theoretical stop loss. And of course an alert has already been set on the sell side liquidity, which is our target. So Now that I'm not paying too much attention there until I hear something, I can focus on EME S&P. With the S&P 500, I would not be surprised if we trade all the way back into the open range gap high before continuing to the downside during lunchtime, because the possibility is there. Let's see. But obviously I wouldn't like to see us trade above this green candlestick, this bullish candlestick on a 15 minutes, if we really are that bearish, extremely bearish. So
in between
Okay, so we are in the last 10 minutes of the silver bullet hour. I wanted to see if we could, well, of course the silver bullet only needs you to make 5 handles, right? We did not tag the high of this other block that I highlighted. We did reject from it, and we did reject from the fair value gap. We also did deliver more than 5 handles. So from the entry going down, at this point was already 6 handles. At this point the trade should have been done and dusted, right? So already did deliver that, but I wanted to see if we could continue for another 15 and possibly for another target in this sell side, which is another 30 handles, give or take. So I wanted to see this, which was why I highlighted this level when I was not seeing anything. On the Nasdaq, we got partially what I'm looking for. Of course, the Nasdaq is extremely volatile. I was looking to see if we could trade here, but looking at this line, right, looking at this white level here, it's written 15461.00, and then look at the high of this candlestick up there. We can see it's 154.00. I personally don't like that. I don't like the fact that it's exactly the same high as this swing high. So now this makes perfectly equal highs. I didn't like that. I didn't want that. I wanted to see if we could take the high during the silver bullet hour and start displacing lower immediately. So I didn't like that we stopped right there. I wanted these levels. I wanted to see if we could quickly turtle soup into this area before falling off. So that was the first thing I wanted to see. We didn't get that, but we tagged exactly the buy side liquidity. Again, not a good idea, but not a good thing to happen. But yeah, we might just leave those equal highs for later on. But we did get the second thing that I wanted, which was a closure below this inversion fair value gap, this CB that failed the first time. We might get it succeeding now, but of course, as I said, I'm not really a big fan of Nasdaq right now because it's not really the weaker sister. It's not really the weaker sister, even though I know it has some catching up to do, and I know it will catch up eventually, but right now it's not as weak as the rest are, because we literally had CPI come through here and in no time completely wiped out the movement. But on ES we have CPI and now we are struggling, but we didn't completely wipe out the whole thing. Same goes with YM, which I had a hypothetical trade here from a 5 minutes chart, looking at this CB and the stop loss being at the high. I'm just going to close that now. Actually, I'm just going to move the stops to break even, then let it close on its own. So yeah, I'm still looking for this sell side, which is where the TP is right now, the sell side liquidity. I'm still looking to see if we tag that. I have an alert set there, and I'm just going to leave it to play out. On ES, I'm not going to think too much about it, and I want to see if the lunchtime macro, if the 1050 to 1110 macro that ICT teaches will be able to push us lower. So let's go down to the 1 minute chart. We have 1050 there, and we have 1110 here. This is the last macro before lunchtime. Then of course lunchtime itself has its own thing going on. So I don't think I'll be watching it past 11 p.m. as I say 11 a.m. as I said. I just wanted to watch to see the ending of the silver bullet hour, then take things from there. Personally, No changes have been made. I'm still looking for bearishness across the board. I will make a video tonight when the daily candle closes. I will have a video out by that time, or hopefully by tomorrow morning, because I'll be waiting for midnight price, for midnight closure. Well, it's not really at midnight, but yeah, for the closure, the daily candle closure. Euro on the 1 hour has given us, well, it's gonna close in the next 4 minutes, so I can confidently say that it has given us a fair value gap there to work with. It's also given us another one up there, but whenever I get multiple fair value gaps like this that are huge and I don't know how to work with it, I switch to a higher time frame. So I would start like with the 3 hour. If I still don't see anything, the 3 hour is also closing soon, and I'm possibly going to see something in there that we could retrace to and sell off during the London session. And then on the 4 hour, we don't have one as well. We still have 2 hours for this candle to close. Well, we have this one, but I don't think we're coming back there. I think we can even call this market structure break and not market structure shift. I think we've broken down to the downside, targeting this sell side liquidity. So yeah, I'll also do a review on the currencies. By so far so good. We're showing bearishness on GU, so we'll see what tomorrow has in store for us. It's Friday tomorrow, so we might see a surprisingly big range day tomorrow. We might actually sweep this sell side liquidity, this low, from the beginning of the month. So yeah, I don't believe I have anything else. Nasdaq is still playing around this range. YM is holding itself. Its bearishness, it's still not pushing higher. It hasn't swept any solid liquidity. It's still holding itself down. And ES is also struggling, but not as much as Nasdaq is doing. So I'm just going to leave this to play out. I'm not going to pay too much attention to it. I will check it from time to time personally, but of course the live stream will be over by then. Yeah, that's about it. I'm not going to cover every single currency that I'm looking at, but I wanted to see us reject from this area, and we did that. But I wanted these specific levels, but because the dollar index did not tag in there, we can basically qualify this as an SMT divergence with the dollar index. Along with let's see, let's wipe these out so I can see the Australian dollar made a high at Tuesday 5 p.m. and then a low after that. Let's see what UCAD did. Okay, it also did the same, so it's following somewhat of a similar trend. So that's all I'm looking for. I'll probably refine all these major pairs later, going into next week, all of them, while we wait patiently for the indices to play their parts, because everything else in the currency side of things are pushing lower while the indices are meandering. So as usual, that's all I have for now. Stay safe, good luck and good trade.